The SEC has accelerated approval for Nasdaq PHLX to list and trade Nasdaq Bitcoin Index Options, marking a significant milestone in the U.S. Bitcoin market. The new derivative product, which will trade under the ticker QBTC, is tied to the Nasdaq Bitcoin Index. This index is derived from the CME CF Bitcoin Real-Time Index divided by 100, providing a benchmark that reflects Bitcoin's price in real time. The options are structured as cash-settled, European-style index options, meaning that gains and losses are settled in US dollars rather than in Bitcoin itself. This design is particularly useful for investors who want exposure to Bitcoin's price movements without the need to hold or custody the actual cryptocurrency. The introduction of QBTC gives both institutional and retail investors a new tool to hedge or trade Bitcoin exposure through a traditional options market. This is a step forward from simpler products like spot Bitcoin ETFs and ETF options, and it reflects a broader shift toward more sophisticated risk management tools in the institutional space. The timing of this approval aligns with a larger trend in the U.S. financial system toward blockchain-linked products. While tokenized equities have faced regulatory challenges, Bitcoin-linked derivatives are continuing to gain traction through regulated exchange. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Channels: Bitcoin is currently trading near $77,000, and the demand for hedging tools remains high as traders navigate volatility from ETF flows, exchange deposits, and macroeconomic pressures. This approval is part of a wider institutional push for derivatives expansion, including recent SEC filings aimed at removing contract caps on Bitcoin and Ether ETF options. However, the approval alone does not mean that trading will begin immediately. Nasdaq PHLX still requires CFTC exemptive relief, and the Options Clearing Corporation must also approve the product before QBTC can start trading. These are essential regulatory and market infrastructure steps that must be completed before the product becomes available to investors. The design of QBTC reflects a shift in how institutional players manage Bitcoin exposure. Instead of relying on spot BTC or offshore derivatives, they can now use a traditional options market to hedge or speculate on Bitcoin's price movements. This is a significant development in the evolution of the Bitcoin market structure. The Nasdaq Bitcoin Index is derived from the CME CF Bitcoin Real-Time Index, which tracks Bitcoin's value in real time. By dividing that index by 10, the Nasdaq Bitcoin Index becomes a more accessible benchmark for options trading. This approach reduces the volatility of the underlying asset and makes it easier for market participants to manage risk. The approval also reflects the SEC's growing openness to regulated Bitcoin products, especially in the wake of recent approvals for spot ETFs. This is a milestone for institutional adoption, as it provides another layer of access to Bitcoin without the need to custody the asset directly. The market is still waiting for final regulatory and market infrastructure approvals before trading can begin. Until then, the product remains in a pre-launch phase. The approval of QBTC is part of a broader trend toward institutional-grade Bitcoin products. As more players seek exposure to Bitcoin, most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The need for hedging and risk management tools increases. The Bitcoin derivatives market is expanding, and this product is another step in that direction. The next key signal to watch will be whether Nasdaq PHLX receives the necessary CFTC and OCC approvals to launch trading. If the process moves quickly, the product could become active within a few weeks. Investors should also monitor Bitcoin's price movements and ETF flows, as these will influence the demand for hedging tools like QBTC. The approval of Bitcoin derivatives is not just a regulatory event. It's a signal of how institutional capital is adapting to the evolving crypto landscape.